Hello, I'm Mesti Pishtiwan. I'll explain my part, which is profitability analysis. Profitability analysis it's just figuring out how good companies are good at making money. Well, we are comparing two gains of company, which is FedEx and Aramex, and see how they did from 2021 to 2023. First, we have to know that what is profitability analysis means. It means checking how well a company turns costs, sales, and investments into profits. Think of it as grading a company on how smartly it uses its money to grow and reward its shareholder. Now, FedEx's global delivery superhero hit a bit of turbulence. Its net profit per dollar of sales dropped from 3.3% to 1.7%. Rising costs and competition were in kind. Its return on assets, return on equity, which shows how well it uses assets and rewards shareholders, also fell. Aramex, however, held up better. Its profit margin dropped too, but less sharply, from 4.5% to 3.2%. Plus, its ROA and ROE stayed higher than FedEx. Why? Aramex has some field advantage in the Middle East, managing cost challenges more effectively. The takeaway: FedEx needs to tighten its belt and adapt globally, while Aramex should keep working its regional strengths. Profitability analysis isn't just about numbers, it's about spotting strengths and weaknesses to help companies do better. So, thank you.
In this section, I will analyze how Aramex and FedEx manage and utilize their assets based on key metrics like asset turnover ratio, fixed asset turnover ratio, and return on assets. These indicators give us insight into how efficiently each company generates revenue and profitability from its assets. Let's start with Aramex. Over the 3 years, Aramex demonstrates a more efficient utilization of its fixed asset comparing to FedEx. This is evident in its constantly higher fixed asset turnover ratio, which exceeded 3.2 in all 3 years. In contrast, FedEx fixed asset turnover ratio remained lower, between 1.5 and 1.7. This suggests that Aramex benefits from an asset-light operational model, leveraging its fixed asset efficiently to generate revenue. However, Aramex's asset turnover ratio, which measures overall asset utilization, declined slightly over the period from 1.123 in 2021 to 0.977 in 2023, reflecting minor challenges in utilizing its total asset base. When it comes to return on assets, Aramex shows a strong upward trend. Its return on assets improved from 0.022 in 2021 to 0.042 in 2023, indicating that its profitability relative to total assets is increasing. FedEx, on the other hand, shows stability in its assets turnover ratio, peaking at 1.087 in 2022 and slightly declining to 1.035 in 2023. However, its fixed asset turnover ratio remains much lower than Aramex, reflecting the capital intensive nature of FedEx's business model, which relies heavily on investments in vehicle, warehouses, and logistics facilities. Return on assets for FedEx declined from 0.063 in 2021 to 0.044 in 2022, before slightly recovering to 0.046 in 2023, showing some volatility in profitability relative to its assets. In summary, Aramex demonstrates higher efficiency in asset utilization, particularly in using its fixed assets while improving its profitability trends. FedEx metrics reflect a constant assets utilization but also highlight the challenges of maintaining profitability within a capital intensive operational framework.
Hello everyone, my name is Mustafa Ali. I'm from Group 5. My job was to do the analysis of the market value for both companies, which they are FedEx and Aramex. I compared the financial trends of the both companies over the last 3 years, and the focus was on stock price, EPS, which is earning per share, DPS, which is dividends per share, as these metrics provide insights into the company's performance and shareholder value. To start, I collected the data for both companies from 2021 to 2023. Then I created trend graphs and a table, which you can see them in our Word document, just to visualize how the values change over time. For stock prices, FedEx showed a significant dip in 2022 but recovered strongly in 2023, while Aramex's stock price steadily declined in terms of EPS. FedEx also rebounded in 2023, reflecting improved profitability, while Aramex faced constant challenges. Lastly, for the DPS, FedEx increased its payouts to shareholders each year, but Aramex reduced dividends in 2023 to focus on reinvestment. Thank you.
Hello guys, I am Mahmoud. Today I'll present a comparative DuPont analysis of FedEx and Aramex. Let's start with the key metrics. FedEx has a return on equity of 15.7%, significantly higher than Aramex's 5.25%. This difference is largely driven by FedEx's stronger profit margin of 4.94 compared to Aramex's 2.27%. Simply put, FedEx is more profitable relative to its sales. In addition to profitability, the equity multiplier plays a crucial role. FedEx has an equity multiplier of 3.15, indicating higher leverage compared to Aramex's 2.37. This means FedEx uses more debt to finance its operations, which amplifies returns for its shareholders. On the other hand, Aramex's lower equity multiplier reflects a more conservative capital structure, which may be reduce financial risk but also limits return potential. Asset turnover, which measures how efficiently a company uses its assets to generate a revenue, is relatively close for both companies, 1.01 for FedEx and 0.98 for Aramex. This indicates that asset utilization is not the key differentiator here. FedEx high return on equity is a result of stronger profitability and effective use of financial leverage, making it more efficient and generating shareholder returns. Aramex, while less risky in terms of leverage, sacrifices profitability and overall returns. This comparison highlights FedEx's advantage in both profitability and capital structure. Thank you.
FedEx is facing profitability challenges due to rising costs and competition, but maintains a strong liquidity position and operational scale. Its recovery in market value and high ROE suggests resilience and long-term potential if it can manage its costs more effectively. Aramex is more efficient in asset utilization and has maintained relatively stronger profitability ratios than FedEx. However, it faces regional competition and economic pressures that are reflected in its declining market value and ROE. Despite this, its conservative debt strategy and focus on regional markets offer stability. Both companies will need to focus on cost control, innovation, and strategic positioning in the face of growing competition and economic uncertainties. FedEx should leverage its global scale for more efficient operations, while Aramex should capitalize on its regional strengths and continue to focus on profitability. The financial performance of FedEx and Aramex from 2021 to 2023, despite operating in the same industry, the companies face different challenges due to their size, regional preference, and operational focus.
We conclude the conclusion in the 3 main points. I will explain it. The financial performance of FedEx and Aramex from 2021 to 2023. Despite operating in the same industry, the companies face different challenges due to their size, regional presence, and operational focus. FedEx, with its global network, has seen declining profitability ratios, higher expenses, and increased competition, although it showed signs of recovery in 2023. Aramex, focusing on the Middle East, has maintained higher profitability but faced declines in the market value and net profit margin. Both companies have struggled with rising costs, but FedEx's margins were stronger. Liquidity ratios improved for both, with FedEx seeing a larger increase in profitability. Both companies experienced declines in net profit margin, ROA and ROE, with FedEx showing a larger drop. Aramex demonstrated more efficient asset utilization, while FedEx's capital-intensive model led to lower fixed asset turnover. Market analysis showed FedEx's recovery, suggesting investor confidence, while Aramex faced declining stock performance. At the final of my speech, analysis revealed FedEx's stronger ROE, driven by higher profit margin, asset turnover, and equity multiplier, compared to Aramex's lower ROE. In conclusion, FedEx showed greater resilience globally, while Aramex maintained stronger regional profitability, and both companies must refine strategies to remain then competitive between each other. Thank you for listening.